Joe, I can't help but wonder if some of the activity today is somewhat skewed because of the big media deal. Stocks are reacting in certain sectors as a result of that. So I don't know. Do you feel like we're in a better place this week than we were last week moving forward for the stock market? By the way, you've got UBS raising their price target on the S&P today to 4,400 for the year end on much better earnings. What do you think?
Well, when you say we, it's interesting because I think you and I are in a good place because we've been highlighting to move away from the high beta names. So, I rang the register in terms of the loss on Pinduoduo, on Coinbase, on Pinterest. Those stocks, they're not done correcting, Scott. And if you are still exposed, if you still have leverage in those areas of the NASDAQ, you're going to have a problem moving forward. If you've moved up in quality, if you've focused on cyclically oriented businesses, if you focus on stocks like JP Morgan and Citigroup, which are making 52-week highs today, then you're in a good place. And I think moving forward, that's the strategy.
Oh, boy, you just called out indirectly Tiffany McGee. Tiff, did you hear him? Did you hear what Joe just did?
I did.
Because,
he's talking smack.
I mean, I thought immediately of you, Tiff. You own DocuSign and you own Zoom. And you've got Teladoc and Zillow and Tesla and Square and Peloton and Coinbase and Shopify. Oh, boy.
Oh, my.
Are you worried?
I do. No, I'm not worried. Listen, this is why I buy individual stocks for the long term and not for the short term, right? So, listen, overall, when you look at what we've been through in the past week, all of these, numbers that have come out and the market has reacted to, I really believe that we're in a transition period, right? And we're really trying to figure out what our new normal is. And it's going to be a specific period of time, right? And it's not that we're going to snap our fingers and go to this reopen state. It's going to take a while for us to get there. And the market, no, and the market is really trying to kind of figure it out.
I'm feeling like we are. I'm feeling like masks off, gloves off. Let's go have some fun.
Maybe. In New York, maybe. In New York in July, maybe. But really, and when I say that, I'm really thinking about the jobs number that came out. And so when you think about the Fed, and the Fed has been so very vocal about saying that they're watching the jobs numbers, I don't think that this jobs recovery is going to be as smooth as everybody thinks. I mean, we've all been, at home, either working from home or maybe out of work or and getting unemployment. And I think that we've gotten used to a particular quality of life. And I don't think you snap your fingers and you go back to the same situation that you were in before, especially if you're making more money in unemployment than you were working before, and you get to stay home with your kids. I think there are a number of factors involved that are really going to not make this jobs recovery as smooth as everybody thinks that it's going to be or expects it to be. But in saying that, I think that you have to kind of play this in two ways, right? So I'm looking for individual stocks that will benefit in the transition, like a DocuSign, like a Korn Ferry, right? So employers are looking for, top talent. And DocuSign, you can use their service no matter when if we're in a reopening period or, a new normal period, what have you.
Okay.
But again, this is why I buy stocks, not for a week or for a couple of months or even for a year, but for a longer time period.
Dr. J, so these stocks have come down a lot. Look at Joe smiling. He doesn't know where I'm going next. These stocks have come down, obviously, a lot, okay? And we're talking about the ARC stocks, the Cathie Wood stocks. Month to date, mid double digits, 17%, some cases 30%, 25%. When do I know it's time to buy some of these stocks again if I really like them as much as Tiffany McGee likes hers?
I think in some case, Judge, now is a pretty decent time to start nibbling into these stocks, and I don't fault Tiffany for being in them during this time. I'm not in those stocks right now, and I'm typically the sort of guy who is chasing momentum. Unfortunately, that momentum has been to the downside as people have sort of feasted on whatever is in Cathie's portfolio. But, Scott, I think the stops and starts, fits and starts that we've experienced already with, for instance, restaurants that want to reopen and can't get enough people back to work, that will start turning the other way over the next 6 weeks. I still think we have to get through this second quarter before we're going to see people exhausting some of that extra money that they got from the stimulus. And this is not me judging in any way whether or not the people deserved it or not. I'm just stating a fact that most of us, if I'm going to have to drive for 8 hours in an Uber, for instance, or work in that restaurant, if I'm making the same amount of money sitting at home and perhaps trading on Robinhood, do I really want to go back to work?